Welcome to the Hero Hub podcast, where we explore the journeys of the industry innovators, trailblazers, and game changers who are shaping the future of vehicles and equipment. Whether you're here for cutting-edge tech, business strategies, or simple love of the ride, this is where you'll find the inspiration to fuel your journey.
My name is Angela Hieronimus. I'm the managing partner for the Amplify program through Ascent Administration. I'm also the CEO of Live Oak Dealer Service, where we focus on training and creating solutions for dealerships. I have been in the industry for 25 years now. Started out in sales, worked my way up through finance, did about a 5-year stint in corporate, and then decided to go about it on this end of the world. So I've been doing this part of it with product training and product knowledge and offering products for about 5 years now, and it's great. I have a devoted husband that has let me go off on these wild adventures, and my two biggest worlds are my 5-year-old that just started kindergarten, and I have a freshman in high school.
I'm Mike Geremia with Merrick Bank, and I've been with Merrick Bank for almost 5 years. Definitely seems like a lot longer when you're in the throes of things, as you well know. So I've had quite an extensive background in finance, starting the automobile side, going back, I'm going to date myself, but probably a good 20 plus years. Started with AutoNation, and then been riding and boating. So two of my hobbies together and my professional career choice together. And I guess if you love your job, you never work a day in your life, right? That's what they say. So certainly works. I was born and raised Floridian, and just recently moved out up to Tennessee. No hurricanes up here, so I'm pretty happy about that. And definitely getting used to the lifestyle up here. And I manage and run the East Coast of the United States, along with a partner of mine back in the home office in Salt Lake City, who's Chelsea. And we run from Florida to Maine. So we work with powersports dealers, marine dealers. The bulk of our business is RV dealers and trailer dealers as well. But overall, great program, and looking forward to this call here and seeing how we can help dealers better utilize and optimize their finance penetration and product penetration.
So today we're going to be kind of focusing on the secondary lending portion of a finance deal. Not everyone is what we consider a prime candidate for what I'm going to call regular lending, prime lending. And what happens is if they're not approved right away with the 2 or 3 banks that they use primarily, then that finance application goes into a locked drawer. We don't leave finance applications out anywhere. It goes into a drawer, and it's just kind of lost. And realistically, there are a lot of deals that are good deals that can be done at other banks that dealerships might not be taking advantage of, and they're leaving a lot of money on the table. But it also comes with I'm going to call it a special set of skills to be able to make sure that you're working properly with those banks to get as many deals done as you can. There's different things that they look at, but there also could be different requirements. And so you need to be skilled in what those particular banks are willing to look at and willing to do, so that you can try and maximize the profits for not only yourself, but also for the dealership that you're working at.
What is secondary lending, and how does it differ from prime lending in terms of structure, process, customer profile?
Secondary lending appeals to me that directly supports the underserved markets. Rising vehicle costs and cautious lending, the non-prime lending has become essential to ensuring that most consumers can access transportation. So the space really helps tap into a broader base, fostering inclusivity and economic mobility. So it's certainly something that is much needed in the dealership world.
To break that down even a little bit further, is that over the last, and I mean, especially since COVID, what was considered subprime back in the day, I think, was more of those sub 600 scores. And what we're seeing on new lender profiles and prime lender profiles is a lot of time those lendings are only going down to about 700 now, or maybe even into the 680s. So there is a big world out there of customers that are not able to get financing in the beginning from what we would have normally considered 5 years ago part of a prime lending situation. And I mean, I was Googling earlier, and from Gen X down, the average credit scores are right at 700 and then down into 690s. And then as you go down in those generational ages, Even those 20-year-olds and 25-year-olds, which happen to take up about 30% of our market space inside of the power sports program, only has an average credit score of around 670. And so that's leaving a huge market open for consumer-based buying that we really want to tap into. And I think that even though it has a name of secondary lending or subprime, what it really relates to is a big consumer base that now has the ability to buy.
Mike, talk to us from a lender's perspective. What's the ideal customer or dealership profile for a successful non-prime deal?
So ideal customers, like Angela had mentioned, those sub 700s in the recreational lending world, whether it's power sports, boats, RVs, the really nice thing about that, and we can all kind of lean on this and know for facts we've worked in the industry, is that it's a want versus a need coming from the auto business. So it's definitely something that makes a big, big difference in the buying experience, but we don't need to go into all that. For dealerships, the ideal profile include those who have had solid training in subprime sales, as well as effective customer engagement strategies to ensure customers' needs are met. Just a quick touch on that.
It's a want versus a need. In power sports, you're not getting in the machine to go to work. You're not getting in the machine to go to school or anything like that. And so it creates a different buying experience.
How much opportunity is typically left on the table by dealers who don't engage in the subprime space?
Until they start measuring what's being left on the table. But typically, if someone isn't approved and it goes into that drawer that I mentioned earlier, then I would venture to say that there is about at least 25 to 30% of those deals that are going into that folder that are approvable deals. Now, I'm not saying that every one of them are, and I'm not saying that they're not going to have a few hoops that they may need to jump through, but I'm going to say a good 25 to 30% of the deals that are going in that folder are approvable.
Yeah, I'd have to agree to that, just because from my experience, what I've seen is that it's obviously all dependent on demographics and geographic location. I mean, if you're getting to Naples, Palm Beach area, outside of Atlanta, some areas of Washington D.C., it's if you got a 750 or lower, it's considered subprime. So some of those higher credit demographics in those areas probably don't see a whole lot, but when you get into some other areas, yeah, I would say at least upwards towards quarter, if not a third of the deals that are workable. You got somewhere to go with them.
Mike, tell us about trends you're seeing in terms of credit quality, approval rates, and dealer submissions over the last 12 to 18 months.
So I'm not really privy to at a real high level, but as far as nationwide goes, but from my area in the East Coast over the last 12 to 18 months, we've definitely seen an increase in credit quality among non-prime applicants. Many consumers have worked to improve their credit scores, after the pandemic, and approval rates have become more favorable, leading to higher dealer submissions as awareness of the potential in the non-prime market grows. So I would say that the credit quality is definitely increasing.
Angela, talk about how a focused subprime strategy can help boost F&I gross and drive higher back-end performance.
Great question. Well, we kind of mentioned that 25 to 30% of the deals are approvable, right? Most of the banks that you will have dealings with will have some sort of back-end product requirements that they will allow, whether that's a total gross or based on LTV. They usually will have some sort of back-end products that they will make sure that they finance in, especially when some of those products are even protecting the loan, right? Like GAP. GAP covers the difference between what the insurance company would pay and what the finance company may still have in a loan. So a lot of times those lenders, whether they're secondary or not, will definitely make sure that they have criteria in there to allow you. So if you have 25 to 30% of those deals that you're able to approve that you weren't able to approve before, and now we have the products available to put on those deals, then you are definitely going to see a huge increase in your F&I gross.
Let's get into process and best practices. What process steps are crucial for making subprime lending consistent and scalable at the store level?
Knowing your lenders. Knowing your lenders, knowing they are all going to have some sort of rate sheet. It's going to tell you, they're going to have checklists. They're going to tell you exactly what they need. A lot of them will tell you exactly what they'll do based on the credit score, based on the customer, based on what may have you. They'll tell you whether or not they need money down. They'll tell you how much of an LTV that they'll have to work with. So making sure that you understand the lenders that you're working with, just like Merrick Bank, they have a checklist that tells you exactly what you need to know. And if you follow those checklists, then you will see that consistency and you will be able to scale that at the store level.
Mike, what are some of the most common reasons that deals get denied and delayed? And what can dealers do to fix that?
So I would have to say that's a really good question because we do see it not really often. I mean, we got the really good dealers who know exactly what we need and have nice, clean deals and get funded same day, which is pretty common with the dealers that do a lot of business with us. But more often than not, it's just documentation, mismatches in income or verification or ID. We do a thorough training with dealers when we onboard them and throughout, our relationship with them as well. If we notice trends that we're seeing, funding delays, but they can conduct a thorough pre-qualification process, ensure all the documentation is ready, and maintain open lines of communication to expedite their approval. So I really think that communication is key, whether it's text, email, phone, whatever the case is. Just pick up the phone and call. We're here to help you. We want to make sure those deals are funded. So it's certainly something that helps everybody in the long and short run.
That's great. And that ties into our next question too. What role does lender-dealer communication play in funding speed and success rate?
I think that we kind of mentioned it and we've hit on it a couple of times where it comes to the checklist and it comes to the rate sheets. When you follow those to a T and you make sure, and when they send over an approval, it tells you exactly what you need for funding. It tells you exactly how much money down you need, what needs to be on the buyer's order. It tells you whether or not they have stipulations that need to be cleared, whether it's proof of income or what we call POI, proof of residence, if something needs to be cleared up on a credit report per se, proof of that. There's a lot of different things that they may require. And that communication between the finance manager or the dealer and the lender is extremely important in making sure that we get all of those stipulations and documents to them in a proper order.
Communication is crucial. I think just regular interactions facilitate the better understanding of deal structures, customer needs, lender requirements. That all will ultimately lead to faster funding and higher success rates.
Let's talk about compliance and risk. Angela, what are some of the compliance blind spots that creep into subprime deals?
Well, I would like to say this is not a compliance training and not a compliance 101. You should speak with your compliance officer about any of that. And the banks are the ones, between the dealer and the bank, are the ones that need to make sure that those compliance benchmarks are met. But what I would say is watch out for straw purchases. If you don't know what a straw purchase is, that is when one person buys it and it's for another person completely, like they have no intentions of doing anything with it whatsoever. That's what we consider a straw purchase. Those are usually frowned upon from the bank level, from the federal government level. Like there's a big thing. So I would definitely steer clear of those type of transactions. I would also make sure that you're getting the right proof of identities. Some require secondary verifications that you can use with like debit cards and credit cards. Some don't. So just when it comes to compliance, I think that those regulatory items for IDs and things like that would probably be the biggest blind spots to make sure that you're aware of.
I even add to that too, some common blind spots include improper documentation, lack of adequate disclosures, and inadequate compliance training for the staff, as Angela mentioned as well. So keeping up to date with regulatory changes is also crucial to avoid potential pitfalls.
Mike, tell me about the approach to ensure compliance, but still support flexible lending for customers with maybe challenging credit scores.
Being a full spectrum lender, we do focus more on that B and C type credit, really emphasize compliance first culture. It's supported through training and clear guidelines. Our technology also helps streamline documentation while ensuring that all regulatory requirements are met. That's enabling flexible lending without sacrificing compliance. So it's a really well-rounded program to make sure that we are compliant and having that culture first and foremost.
Mike, talk to us about how Merrick Bank is using technology to streamline those submissions.
We do utilize advanced analytics and automation tools to enhance decision-making speed. So our online platform allows dealers to submit applications easily and receive near instantaneous feedback. It improves turnaround times, quality of the decisions, and that's very user-friendly too, in my opinion. I did mention our online platform. It's not ours as a Merrick Bank, but we use a third-party integration as well. So it's certainly something that any dealer can reach out to us and we can help them out with that.
We'll switch gears here a little bit into leadership and strategy. What role should dealership principals or GMs play in shaping and supporting a robust subprime strategy?
The GM or the dealer principals should be playing a role in supporting the strategy as a whole. Personally, now I understand that we're focusing on subprime secondary lending, but when you have a good strategy for the whole F&I department, then that works better. So an active GM taking a role inside, making sure there are any last chance deals. What if we, working with the F&I manager, the sales team, what if we drop it down to 80%? Does the customer have any more cash down? Like, someone being actively involved in working all deals will definitely help with those subprime lending. Having a GM that's involved and a sales manager that's involved, and maybe, Mike, I'm going to call you out at Merrick. Maybe they wouldn't be willing to give the guy 10 grand, but I'd probably look at 5 grand, and then a unit just came in that fit their criteria that you could sell for 45, right? So making sure that the other members of the store is involved so that we can try and have a full spectrum of eyes looking at these deals to make sure we can get that extra 25 to 30% out.
I would add to that too. I mean, as far as what dealer principals, GMs play in shaping and supporting a robust subprime strategy, it's just as simple as you should actively advocate for it. The subprime lending by providing the resources, the support, the training initiatives as well, and fostering a culture that encourages the inclusive financing solutions to benefit a diverse customer base. I know that when I was a director at a large dealership in Florida, meetings, I just had an acronym made up. It was every Saturday morning we'd have a SAD meeting, and it's basically stood for Save a Deal. A Save a Deal meeting. It was a GMD Get Me Done meeting. Like, what can we do to make these work? And everybody pull together and make those calls and submit to other lenders and try to figure out a way to make it happen. And like Angela said, it's certainly something where, with Merrick, it's always better to get a slow yes than a fast no, I think. So it's definitely something that we're going to find a way to make a deal work, whether it's getting a co-signer, more money down, a different unit, something. We're going to give you a conditional approval if we can, try to make that deal work versus just saying no and not having a deal for anybody, because nobody wins at that point.
I'd like to circle back on that. I mentioned something that I think was really important. We want to make sure that we are circling back. And when you have these Save the Deal meetings, when you have those type of engagements within your organization and you have the sales department, I'm going to use SAD for the record. I did like the Save a Deal. I'm going to use that one. When you have the sales manager and all of those people together, then you can work together to be able to find that extra money, that extra deal, that, maybe that customer just got an extra $5K bonus. Maybe they found a co-signer. Like, when you're having those meetings, you will have a better understanding of what's going on within your store. And, the goal is to get just one more out.
Angela, talk about what training F&I teams need to close more of the non-prime customers ethically and confidently.
I'm going to revert back to those sales sheets that we originally talked about, the rate sheets in the beginning, right? Everyone has different requirements for their deals, whether it's your OEM relationship lenders or your local banks, your local credit unions. Most of them are not the same. And subprime and secondary lending is going to be the same way. So they're usually going to have on a rate sheet what they're willing to do, what they're not willing to do. And you need to be versed on what all of that means. They're going to use words that we don't normally understand as normal people, I'm going to call us, that aren't in F&I or aren't in the lending institutions. And when you're working through these, you have to make sure that you're checking all of the boxes in the beginning. If you know that bank that you're working with requires proof of residence and he's been at his residence for a month and a half and the only thing he has is a cell phone bill, that might not cut it, right? That might not cut it. So understanding what the lenders are going to be requiring for those particular documents are going to be extremely important. And most of the time, a lot of it's the same, but sometimes not all of it. Same with proof of income, whether they're self-employed, whether they're citizens, ones that maybe are here on visas. So there's a lot of different lending requirements, and you need to understand what all of that means. And if you don't, you need to ask better questions. I mentioned earlier that you need to have a good relationship with your lenders that you're using, and that way you can pick up the phone and call and ask those better questions so that you can make sure that you are not going to be the bottleneck for a deal getting done.
Mike, talk to us about what makes Merrick's program different from maybe other lenders in the space.
I'll keep it short and sweet, but it's certainly something that, we have a personalized approach. Underwriting combined with dealer support, I think it really sets us apart. We focus on creating flexible terms tailored to individual customers' needs while ensuring efficiency in the lending process. I just know from my experience, what sets me apart from even my colleagues and coworkers too is, and I learned this from being in finance, is the availability aspect. Semi joke, but in all seriousness, tell dealers like, hey, if you're working, I'm working, because that's how important it is. I've had many times when I was in finance, I picked up the phone to call my lender. It's Saturday night, Friday night, whatever, even Monday, whatever the case is, and I'm trying to get this deal done or get it bought or something's happening, and I can't get through. Guess what? I'm going to my next approval, right? I can get a hold of somebody and talk through a deal to make sure it happens. I find it very important to be able to respond quickly. If you can't get the deal done, just let them know. If you can work through it, great. But most of all, pick up the phone, call them back. That availability is very important, I think, in this. It's a now business, not tomorrow business.
Are there any recent innovations, program changes, or enhancements that have improved dealer performance and customer satisfaction?
So we're in the process of having some pilot programs. I can't get into too much detail with it, but we've definitely introduced in the pilot programs. They're going to help underwriting and decisioning and things like that to help it quicker and faster to be able to provide more approvals to dealers. So, but we did introduce an enhanced training program for dealerships that focus on subprime lending, the best practices and compliance, which has led to improved dealer performance and greater satisfaction among our partners.
Angela, what's one immediate step any dealership can take to level up their subprime performance this month?
Google your lenders, call Mike at Merrick Bank and get signed up with him. Find out who else is in your area. You probably have local people that you can work with as well, that you can establish a relationship with to help get those extra deals. Again, we've talked about it. If you are not using subprime or secondary lending, there is a lot of money being left on the table for both your store, your finance managers, everything. But I will tell you this, if you're not doing it, someone else is. And that customer that wants that machine bad enough is going to find somebody who is going to get it done for them one way or another. And it might as well be you.
Mike, what's one piece of advice you'd give to dealers looking to strengthen their partnership with a secondary lender?
Yeah, I think this whole conversation and meetings really circled around one main theme here, and I think it's just communication, and it really is. It's really key to building strong relationships, with your secondary lenders. It can lead to better support and more tailored solutions that drive performance. But I think the overall message too is whether it's Merrick Bank or one of our other competitors or some other lender out there, the bottom line is just pick up the phone and call. So if we don't get every deal, which of course I'd like to get every deal, but I know it's not a perfect world, so. The bottom line is get that unit finance, help that customer out, get that deal out the door, put another X on the board. That's the ultimate goal. So whether it's us or another lender, just try to work that deal to where you can't anymore. So it's certainly something where communication is key.
Keep in mind that when it comes to the banks that you're working with, they have specific boxes that they have to check. And not every deal that you're sending to them is going to check all of those boxes, and they might not be able to get one done. And that's okay. But I also recommend, having real conversations with them and getting to know them and getting to understand what their criteria is. We're talking about not a prime lender. This is a secondary lender. So they're going to be different. What Mike and his team are willing to do might be far beyond what a local bank is willing to do, but that local bank might have a great rapport with that particular customer. And if you see that on their credit report, especially if you're pulling credit, and you see these other lenders that are on there that are in the secondary market, that is a perfect opportunity to reach out to them, see if they do indirect lending, right? Like Mike and his team does. But if they don't, see what you need to do to be able to work with that bank and be able to send them paper that they can look at. Because if they have a perfect credit history with that particular bank and maybe questionable with other places, that bank will probably be willing to look at that deal a lot more than another one would.
What do you want every dealer listening to walk away understanding about the power of secondary lending?
If you are not using secondary lending, you are leaving a lot of money and a lot of deals on the table.
Yes, I couldn't agree more. And I just think, adding to that, secondary lending, it's not just about expanding sales. It's really also about creating opportunities for consumers who need them the most. So embracing this market benefits both the dealership and the community. It's fostering trust and a commitment to a customer service. You're helping that customer getting on something that he can finance and be able to go out and have fun on. To me, it was always a personal thing to watch somebody who couldn't get approved elsewhere, and I was able to get them approved out the door, ride that motorcycle, ride that ATV, side by side, whatever, out, and that big smile on their face. So it really is a great opportunity to be able to help customers out.
That guy that you were able to get approved, that no one else was getting approved, when it's time to buy again, because realistically, they're customers for life, right? They're going to come right back to you. And you might be able to use prime lending at that point in time versus secondary. They're going to be a dealership customer for life. They're going to remember you. They're going to remember that you absolutely went to bat for them, got them approved, got them the machine. And it might not have been the machine they wanted. Maybe they were looking at one that was 35. Maybe you only got one for 15. And maybe it's now time to trade up and get the one that he was looking at to begin with, or she. But they're going to remember you. So you've created a dealer's customer relationship, hopefully for life.
Yes, and I can just speak from experience. One quick story, and I use this with a lot of dealers, prospective dealers that want to sign up, but because it happens to all of us. Watching a customer walk out the door with a pocket full of cash, you got nowhere to go, you've exhausted all your resources. They come back a month later, 30 days in for their first service, and you're like, wait, you couldn't get done. No, so-and-so down the road got me done. He got me done. Well,
Yeah.
and I'm picking up the phone, I'm calling them like, well, who do you have that I don't have that I couldn't get them done? So it's just really about having all your resources. And I don't know, I used to believe you can never have too many banks, and I still believe that, So if I get one deal a month or one deal a quarter, one deal a year, that's one more deal you got that we didn't have before.
There should be a full binder full of lenders that you can reach out to. Again, we have a lot of customers. There's a huge broad range. I mean, we have people from 18 that are just brand new in the credit world to people that are in their 80s and 90s still buying, right? Like that's a huge sector of people. And realistically, at a prime level, you're looking at around a 700 plus credit score. And there's 1, 2, 3, 4, 5 generations that the average credit score is below that. That's a lot. If you are interested in learning more, Google's a great option to get you started with your local areas. If you're using places like DealerTrack, they will have lenders in there that you're able to sign up with directly through there. Reach out to maybe dealers not in your local market because they're probably not gonna want to give you all their tips and tricks of the trade, but maybe a little bit expanded, and maybe talk to them. Look at the credit reports that you are pulling, see if there's lenders on there that you're unfamiliar with. Reach out to them. Take cupcakes and donuts to your local secondary lending and get them engaged with powersports. They're probably familiar with auto, but maybe powersports isn't something that they've really stuck their necks out into yet, and see if they'd be willing to take a chance on some motorcycles just getting started. But reach out. One of the things that we train on is knowing all of your local lenders and adding a local lender every single month. You want your lender folder to no longer fit in a folder and then no longer fit in a 1-inch binder to where you have to buy a 3-inch binder to put all of the information in.
If you only have 2 lenders, your manufacturer lender and maybe your local community bank that you're using, spread out. It's changing, and it's certainly a way to be able to provide that service and that opportunity for that customer, keep that customer for life.
Well, thank you so much to our guests for joining us today, and a huge thank you to our listeners for tuning in. I hope you found today's conversation insightful and inspiring. If you enjoyed the show, be sure to subscribe, leave a review, and share it with others in the powersports industry. We're excited to see you at the next one.